What's up, YouTube? Welcome back. We're going to do a quick little video here. I asked you guys in the community tab. Previous video, I told you guys check out the community tab because I'm going to start doing these quick little videos for you. I'm going to ask you guys, and then what I want to see is a bunch of interaction so I can just kind of pick like the most popular one. But these are quick. We can cover all these. You were correct on the pump and dump today. If you watched last night's video, it was stock market's red and tomorrow's pump don't trust. You know, calling out the rise like that for someone that's been doing this for a while was not hard. That wasn't magic. That's just, I don't want to say normal interaction because anything could happen, but I felt confident. So deeper red tomorrow kind of looks like it. So I can't check charge point in Zynga. I haven't checked Zynga in a while. Charge point or Upstart. One of those is rocking and rolling. You want to know how I organize my watch list? I told you. And then we got some tickers. So as far as my watch list goes, this is my watch list. The dollar, the Russell, the NASDAQ, the S&P. Then there's oil, Tesla, Amazon, Apple, and then here's the crypto. Kind of have them just in their own little sectors. With the dollar, I trade Forex with this. I want all the underlyings up top. The Russell, now I'm trading the Russell futures. I'm trading Russell, so IWM options, the futures contracts. IWM shares, not really. Same with the NASDAQ and the S&P. So I'm using all of these to trade either futures or options on the IWM, QQQ, SPY. US oil, the ETFs just aren't worth it for me. So I only trade oil futures. And then Tesla, Amazon, you guys know, my bread and butter. Apple, I never sell, which you guys are asking for. And I'm going to give you guys a video because I never sell Apple or Ford. I just collect shares more and more. And while it goes up and down, I'm still making money because I'm using options contracts to basically collect rent on those shares. What you're asking, is tomorrow going to be a deeper red? If you notice today, we jumped right up into that yellow, magic yellow zone. And we rejected. Right now, we're kind of where we're at. Futures are selling off a little bit. If you look at the options chain, because the S&P has expirations Monday, Wednesday, and Friday, which is why you hear YouTubers talking about quad witching. Those are brand new YouTubers that probably have no idea what they're doing. Because quad witching, it used to be a thing, but now, because that was when like things were all expiring. Things expire all the time now. There's just not that much volatility to really bring up quad witching like it's anything. But we do have a Wednesday expiration, so this tells us the expected move between, you know, today's close and tomorrow's close. We're expecting a $4.90 move on the S&P. So these are the SPY futures. Here's the underlying. So let's go to today's close. Oh, bearish engulfing. Is it gonna fill the gap? I probably just offended somebody for sure. Gap fill. Is it really a gap if you only read the odd pages in a story and you kind of just guess the even? For sure, if I didn't hurt your feelings the first time, I definitely did with that one. You can let me know in the comments down below. Oh, you hurt my feelers because I trade. There's always someone that's going to tell me the gaps fill 90% of the time, or you know, something weird. I know. Thanks. I just, as far as stocks go, to be serious, to put this disclaimer on there, gaps are a real thing. They definitely create support and resistance levels, but I just don't care for them on ETFs. I'd rather just trade the underlying and know. Like if there's if you're talking about Tesla, I care about the gap. Talking about an ETF, not really. I would rather just look at the underlying. If there's a gap in the underlying, I'm all about that. All right, so here's the expected move for tomorrow. You know, let's see. I wouldn't surprise me to see up, then down, down, then up. The downside to this is here's the weekly expected moves. And you'll see here, I only care about the weekly expected moves, and we'll be below that. Now, what happened the first time? Market makers reined it back in. They get outside this. It's not a support and resistance level. This is where market makers need to start hedging. We're talking about gamma squeezes. It's on the other side of this fence. So getting below that and closing right here might set up for a fun rest of the week. You know, we just might, you know, this is a made-up number I make up in my head, but just from my experience, if I had to put a number on it, I'd say 80% of the time we rein it back in. But that 20% of the time can make it risky enough that you might not like those odds enough. So if we do close at that bottom tomorrow, I would keep an eye out. Again, this channel is not for pumping or fear-mongering. It's just trading. There's no emotions behind this. So let's check out those tickers really quick for you guys. Also, tomorrow morning there is going to be that same post. So jump in and just give me what's the quick update. If there's something you wanted a quick update on. As far as charge point is in the zone, do not want that zone breaking. So if I was going to buy this, this would be a type 1 for me. If you're unfamiliar with that, I have a playlist called How to Trade. There's one there called Perfect Entry Types, and then 1% stop loss the correct way. That's how you actually manage risk, like a professional. So those two should get you caught up on what I'm talking about when I say type 1, type 2, or type 3. My stop would be 1885 on this. Zynga? There it is. Zynga, not the biggest fan. You know, if I was watching this, it would have been right here. I'm going to leave it there. And then, so we even bounced out of that, tried to hold. So there were some type 2 buyers here. Type 2 buyers, again, failed. So not the biggest fan. I would expect that to sell off. If this did have a green day, I'd worry about rejection at the $8 mark. Getting back above the $8 mark, maybe pulling back and testing the top of it. So when I say buying at $8 would be a good deal, I'm not talking about going up and buying at $8. It gets above to the $8.40-ish mark, then pulls back to $8. We'll have the same entry. Mine will probably have a little bit less risk if you could say that. There's no such thing as safe. It could just blast right through that. But at least we're testing from the top, you know, and I'm not just going to buy at the resistance. I'm trying to buy the dip. But I would be careful on this one because that looked like a pretty decent floor to break. A typical trading day for me, I'm up at 5 a.m.-ish, and I'm usually checking Forex plays, moving stops into the green, but usually not getting in. I'm usually in management mode. Yeah, I just wake up, check that. But everything, because I plan everything at night, so I just do whatever I want. I could be golfing, I could be doing real estate, whatever I want. It was charging, but this watch is amazing because when an alert goes off, I pull up my phone and I either take the trade or I don't. Sometimes I set alerts to just know about that zone, like, hey, it's time to start babysitting. But, you know, most of the time it's just I'm going to buy it. So I buy it. You know, and then do whatever I want. At the end of the day, I go live with my mentorship. We look at stocks. That's where I set those alerts. And if they agree with me, they set the same alerts and they take the same plays. Ticker EVC, Clove, and DraftKings. Let's do DraftKings first. Selling off. I looked at buying the dip today on this, but I'm in pin, and I didn't want to have, just as far as exposure goes, I am pretty mindful. Like, if the trade makes sense, I'll still take it. Like, I still might grab some at this zone because the charts will trade differently. But as far as like allocation into specific sectors, you know, I don't want to be completely open to this. Something comes out gambling wise and smokes the both of them, because then I have to be mindful of my allocation towards all of it. So that's just why I didn't. But if it did get to that $50 mark, I'd probably take the trade. Sorry, my kid has found the microphone. Yeah, I think, oh, man, 49.85 would be my stop. You know, if it breaks that, I'd probably just steer clear. You're already buying a waterfall. You're just hoping to catch it at the bottom, and you got some scenic views, and it's going to be a good time and ride it back up. But that's a risky one. EVC, Intravision Communications. Looks all right as long as it holds this level right here. Now I'm grabbing it from right inside. So that was these zones are areas of attention where the buyers and sellers really battle it out. And we saw rejection. We finally got on top, and we're holding right here. So I would, if you're going to take the trade, I'd get in here. I don't know if I'd add on. I would only take one position. Coming into it, I might have taken a type 1 and a type 2, but a ticker at this price, I'm going to grab one position in this zone. My risk would be 645, and that's where I'd put it. If somebody called out a stupid gap fill and it stopped out at 645 and turned around, I would get back in, but right now my stop on that would be 645. Doesn't look bad at all. So right now, kind of a drop base, could be a drop scenario, but I like this this history behind it. So that one I wouldn't feel too bad about. There's one more. Clove. I saw a lot of people asking about Clove. I'm not in it, but I've sold puts that just expired. I did not get back into it. I'm probably going to sell I'll sell some $7 puts on this. I like Clove down here, and I kind of like at these levels, but this is a back burner play for me. Put some money in here at these levels, stop out down here, but you know, if it turns, it's a Chamath ticker, and it's been known to pump. It has these one-day pumps, so I put a little capital on here at the bottom level. It's kind of like we did with Rocket. When it pumps, we trail it, it tags out, and we'll just do it again, rinse and repeat, until one day it just never comes back down. So if that ever happens, I'll be in it with you. There's people that are just holding Clove till the end of time, and they're riding this up, they're riding it down, up, down, up, down. You know, and by the time it gets to its end destination of 50 bucks, whatever you say its valuation is, 20, 50, we're both going to ride it to 50. But I got to ride it so many other times. And that's just what I like about Clove. It's a fun one to not bag hold and just get in, sell when it's green, and get back in. And we're approaching these levels, so not a bad trade right now. Options, I'd rather sell options on this. It just spends too much time down here. You could catch the move on this. But as far as buying calls, it's a tough one to gauge. If I were to just buy calls, it'd have to be December, maybe even March expiration. So I'm going to hop off here. We do have Powell talking tomorrow. So I would expect a move in the morning, probably some chilling out and just quiet. Then after that lunchtime, we're going to see some volatility probably pick up. So stops in place. It's not the time to bag hold. If we do see that start to break to the downside, why are you holding? Is the question. If you can answer that, then it sounds like you have a plan. If you don't have a plan, it's time to button things up. So hit that subscribe button if you like this. Give me a thumbs up, please. And then again, check the community tab tomorrow for that post and let me know what I can break down for you guys. And I'll see you there.